Good morning or good afternoon, wherever you are at. Things rearranged here real quick. Whew. How's everybody doing? Can y'all hear me loud and clear? I don't have it muted. Made that mistake a few times. Morning, Helen. Get comfortable in here. I've been squirming for the last half hour or so. Went from a good day to a not so good day. Hey, Kevin, what's up? So, but it is what it is. So, well, some things are good and other things are not good. The one thing I'm focused on most is like I said, I went from up to down. So, on a stupid decision. I guess it wasn't horrible, but so let's get the disclaimer out of the way. I'm not a registered broker dealer investment advisor. I'm not going to give you any recommendations or advice. Everything we do here is purely for educational purposes. If I do happen to mention a trade, just assume that it is a paper trade or practice trade for regulatory reasons. We do not discuss funded trading. So we're going to have a little fun today, maybe. Depends on where you're at. Deal with some emotional stuff, which I'm in the middle of right now. And it's going to do what I thought it would too. And like, it's going to hit me even worse here in a minute. So if I look distracted looking over at this thing, I gotta just stop looking at it because it'll just make me mad. Um, anyway, here's the upcoming stuff. Premium online workshops, the Inner Circle, and then Mastermind Group. You see on the 15th and 22nd, Wealth with Spreads, the 16th, Trading You, the 21st, Monster Market Movers on the 23rd, Power Hour every Monday at noon, and then this one, Trading Coaches Playbook, every Friday at noon. And then Power Option Plays every Monday and Thursday. Cover Call Explorer with Trip on Thursdays, and E-mini Think Tank with Branding Monday, Wednesday, and Thursday. So then you can find us on all the social media platforms. So go check those out if you're not on them. And then if we haven't met, these are all the tools that I've created over the years. And of course, I forgot to turn that down. Just a sec. Let me get that turned off real quick. I can't get it turned down. There we go. There we go. I'm not going to mess with that thing this morning. I think you're all familiar with this, right? If you have any questions, just shoot a message real quick about that. So, but let's get to the topic of the day. Woulda, coulda, shoulda syndrome. Anybody have this one? I know, dumb question. We all do. And it's on display every single day. Exactly, Jennifer. Like every hour for me, if I'm day trading, which I am mostly just the future. So, and today's one of those days. Right now, I'm just like, I should have just quit while I was ahead. But the first one that I took a hit on wasn't bad. Um, yeah. You get a life sentence, Kevin. He's just guilty as charged, Your Honor. Well, slam down the gavel if I had one. Life sentence. You're going to have the woulda, coulda syndrome your whole life. I mean, I've been at this 25 years and I still deal with it on a daily basis. So, um, yeah, the second at bat I took, or I guess it was the third of the day, was not the first two I was profitable on. Then I took a big swing and lost less than my original. So I reduced my risk enough to where it wasn't extremely painful. And then the last one was just dumb. I should have waited, and I kept sitting there, and I got little. I can't say I got greedy, just impatient. I think so. Yeah, there's that one too, Norman. I guess I got that kind of. I don't know if that's a separate category of its own or if it's all under the same category. So that's what mine was. The last one I did just a little bit ago. I did it, and I shouldn't have. I should have kept waiting. I was waiting actually for a specific setup, and I got impatient because it broke out north, and I was like, ugh, it's gonna keep going. The next target was still it was a ways up there, and I thought, but it looked like it was overbought though too. So I'm like, maybe I'm, but I'd missed like three or four or five opportunities on the upside. So I left 1,000, 1,500 bucks on the table over like an hour's time. It's like, so I just kept watching these opportunities pass me by, and then as soon as I see another opportunity that might be a good one, it isn't. So, but like it says on the screen there, hindsight is always 2020. It's easy to look back and see it. And especially when you miss it, right? Or if you don't. There's both sides of the coin, right? When you miss a trade, you're cranky and frustrated because you missed it, because you didn't take advantage of it. You saw it, you planned for it, you looked at it, you went, okay, I think it's going to do this. But then some reason you didn't get in. Usually it's fear. When you really dig down and peel the onion back and you figure out why you didn't jump into it, it was fear. And then something moves, it does what you thought it would, and you're like, ah, then you're mad, right? Well, it's easy to see that after the fact. It's easy to look back and say, but when the bullets are flying and you're in the middle of it, and you've got to make a decision whether to pull the trigger or not. It's a whole different ballgame, right? That's why, people that come in and they paper trade, like I killed it on paper trade. And then as soon as I started trading with real, it's like, yeah, that's the difference between playing laser tag and being on an actual battleground where there's an enemy and actual bullets flying. That's literally the difference. You're playing in your backyard or, out on the back 40 with laser tag. It's for fun and nothing's going to happen. Now, if someone your real life's on the line, it's a whole different ballgame. It's not even close. So, but it's very easy to get frustrated, right? And then you get cranky and upset, and then you make dumb decisions, and um, which it's like 45 minutes ago, so I'm still raw in my head right now. But this goes to your point, Norman, which I'm glad you brought that up. But what about the times you would have lost? What about the times you didn't pull the trigger? You looked at it, you analyzed it, you said, I think it's going to do this. And said, nah, I'm going to wait, or for whatever reason you don't get in. And if you would have pulled the trigger, you would have lost on it. How many times do you log those opportunities? Because it's easy to get cranky and frustrated when something goes and you would have made a killing, and it's easy to see that and remember it. And that's something we always log and go, I missed that. I missed that opportunity. I missed that opportunity. I could have made this much money. Because you're so focused on what you could have made, right? That's what we're always focused on, is how much can we make? You'll eventually figure out that when you focus on your risk and managing that well, that's where things will start to change. You'll start to do better once you start to manage your risk well and focus on your risk and forget about the profit potential. I mean, it's there. It's a piece of the equation, but it's not the most important piece of the equation. Because if you manage your risk, and as long as you don't continue to beat yourself up financially, then you're still in the game, right? You have another bat, right? It might be 3-2, but at least you got another pitch coming. Maybe you foul off the next one. Great, but you know what? You're still in the game. You're still in the batter's box. But how many times do you log the times where you didn't get in, you stayed out, and you would have lost on it? I had at least 2 of those this morning, maybe 3. I remember 2 of them. I'm like, whew, I'm glad I didn't pull the trigger there. I'm glad I was patient. I'm glad I made that decision. How often do we celebrate those? That's kind of the. I had a different name for this class originally, but it wasn't PC enough to put out there. So, but what was it called again? Celebrate the non-trades, I think it was. And of course, I use baseball a lot, as I just did as an analogy, right? You're stepping into the batter's box. Now, just imagine that you're sitting there, the count is full. You're in the batter's box, you got another pitch coming, the bases are loaded, the score is tied. You got to make a decision. What kind of pitch is coming? You analyze the situation. It's probably a fastball. And then you got to make a second decision of whether to swing at that pitch or not. And the pitch comes, and you don't know, but you think it's a bad pitch. It's not going to be a strike. So you don't swing at it. And the ump calls a ball because it is a ball. The pitcher just walked the winning run in. It's the bottom of the ninth, of course. So the winning run comes in based on your decision not to swing the bat, not to get a hit. Instead of swinging at a bad pitch, you hold back and you take a ball. And it's still a celebration because you still won the game based on that one decision not to swing the bat. Why don't we do the same thing in trading? Because you still got a W, right? The game is still a win because you took a ball. And just a few weeks ago, I was like, that's crazy. Why don't we? Because I started actually getting excited and happy. I'm like, okay, I'm glad I didn't get in there. I'm glad I didn't get in there. I would have taken a hit. I would have lost. I would have lost. Like, why don't we celebrate these? Why aren't we happy when that happens? We just kind of forget about them most of the time. At least I do. Maybe y'all are different. I don't know. But I think it's important that we keep a balanced view of the decisions we make, whether they're good or bad, or they work out or they don't, right? Because it's really easy to stay focused on what you missed. Or when you have a trade that does go against you, same thing, flip that coin over, right? If you celebrate the non-trade, the trade that you didn't get, you celebrate the ball. Oops. That was accidental because that doesn't sound right. Um, you also have to go back and look at the trades that you did lose on. And did you make a mistake? Because we automatically assume that when we made a mistake on a trade, when something didn't go like the one I did this morning or just a little bit ago, was it a bad trade? Was it a bad place to enter? Was it foolish on my part? And would I have to step back and ask that question and look myself in the mirror and say, okay, did I make a stupid decision here? In that case, the answer is yes. I literally had been waiting for 45 minutes or an hour for another opportunity to pop up. And I kept telling myself, other opportunities popped up. It's like, okay, this one, it popped up like 20 minutes before that one. Like, if it breaks out of here, it might run up to this level. That would be enough to be a little bit profitable. I was like, just be patient. Let it break out first and see if it does a roll reversal. And actually, it did. It did. Several of them did that this morning over the last like 2, 3 hours. Breaks out, roll reversal. For whatever reason, I didn't pull the trigger and it took off. And 4 or 5 times that happened. So my frustration over missing them, and then here it's doing it again, I decided to pull the trigger on it. And it really wasn't that great of an opportunity. I should have continued to say, just be patient. Should have told myself. I literally sit here and talk to myself out loud like I am now. Just be patient. Is there a compelling reason to get in here? That's a question I ask myself all the time. Is there a compelling reason to enter the trade right here? If the answer is no, then just be patient. Wait for a compelling opportunity. Wait for a premium hand for you poker players, right? You want jacks or better. And I didn't do that. So I made a mistake on that one. The one before that was not a bad trade. I analyzed, drew the lines. Okay, if it breaks this level, it's probably going to go lower. And that was the analysis was good. Everything about it was good. And I actually ended up taking that one. I took a little bit bigger position on. So I had initial risk was $750. And with the way I have it set up, it ended up, I took a small profit on part of it and almost got another little profit, which would have put me break even, but it ended up turning around. I ended up eating, I think, 280 or $300 on that one. So I cut my risk more than in half by scaling basically. So that one, as I look back and you go back and review your trades in your mind, you're just, okay, was that a bad trade? Did I make a bad decision? Did I do this? What did I do? Could I have done something differently? And that was a good trade. I lost money on it, but it was still a good trade. It was a good setup. Everything about it was good. It was breaking out. I was maybe a little premature on it. I probably should have waited for a roll reversal for it to fully break out and then do a roll reversal. But sometimes things break out and they just take off and run. And that's what I thought was going to happen here. So I decided it was worth the risk. And it turned out fine because, again, I lost, 40% of what my max risk was. So that was a good trade. This last one, though, was foolish. I should have kept being patient. But I did take a smaller trade. So on one of the decisions, see, you got multiple decisions. That's the other thing is remember that there's lots of different components to each decision. The good decision I made on this last one that I did, which was a bad place, the timing was off, but I didn't take a smaller position. Partly because my confidence was shaken over the last two trades before that I lost on. There's nothing wrong with acknowledging and recognizing that your confidence is beat up a little bit. Mine is every day. It's good and bad, right? It swings just like the market. It swings with your account, right? If your account's up, your confidence is up. If you're kicking butt, your confidence is up. If you're getting beat down, your confidence goes down. That's normal. Nothing wrong with acknowledging it, and not only acknowledging it, but recognize it first. Recognize it, then acknowledge it and say, okay, and then slowing down. Just, okay, take it easy. So that was a good decision on that because I would have taken a big hit if I would have been crazy and gone with a big position. So that part of the decision was good. So in that sense, I'm good because I didn't lose as much as I could have if I would have been more foolish and been on tilt, right? Getting a little ahead of myself here, but for those of you who are poker players, you know what that means, right? If you're on tilt, your emotions are raw. They're just, in other words, you make foolish decisions when your emotions are out of check. And that is the key to this business is keeping your emotions in check, managing them, not eliminate them. Anytime somebody says eliminate your emotions from trading, I just laugh at them. I was recording my weekly whispers last night, and I put on a trade last night because there was a good looking setup. I'm like, I'm just going to take a little one after hours, and at night, it's not the liquidity in the trade is not that great, but for some reason there was quite a bit of trading going on last night, and I'm like, this looks pretty good. I was like, okay, there's a little bit of risk. The odds of it, the moving average was right there, a little bit, about a point below it, and it was kind of just consolidating a little bit. And I thought, that thing looks like it's going to pop. I'll take a couple $100 of risk and see what happens. Boom, takes off about 30 seconds after I get in. And it's going because this thing has a trailer, right? Automatic trailer, and it makes a little cha-ching sound each time it moves the trailer up. And as I'm doing the recording, it's like right out of the gates, right before I started recording, I flat out said right out of the gates, like, "Hey, I just put a trade on. You might hear the cha-ching, and if that's a good thing if it is." And sure enough, it just so it had to cha-ching a bunch. Ended up banking like $160, which wasn't a ton, but it's good enough to start the day off, right? It's a little bit of a profit, a little cushion, and it's a confidence builder. Um, And right now, and that's why after this last one, I'm like, I probably should just quit for the day. No more trades because I'm cranky. And that's the thing is recognizing when you're on like, poker, if you're not familiar with that. So, oh, hey, Brenda. Oh, I just saw your comment, Steve. That's why he trades with the dog. Not so crazy when I talk to her. Um, yeah, I'm crazy anyway, so I really don't care. People think I'm crazy already. So, I mean, you kind of have to be a little bit crazy to trade the way we do, at least. But, oh, I just saw your second comment. When she talks back. Does she talk? Does she speak English or Spanish? I'm just kidding. Um, yeah, exactly, Jennifer. That's the thing. It can be depressing or euphoric. It's an emotional roller coaster ride, and it's. I mean, it's not much different than life, right? I mean, it's not, like anything. You can apply trading and how we trade to everything in life. You can analyze it and compare it to everything. So it's just that it happens relatively quickly in the market, and it's when you put your money on the line, it can be very emotional because obviously you want to get to where you want to be financially. So the goal is to make profitable trades every single time. Coming to the realization that's not going to happen is a big step in the right direction, right? It's just like every business on the planet. You're going to have losers. You're going to pick a bad product to put on your shelf and nobody wants it, or you don't sell enough of it to make a profit. So you got to discount it to just get it out the door. Same thing in trading. You get into a trade, it goes against you. Well, you have to discount it to sell it and get what money you can back to re-put it into something else that could make you a profit. Same thing. So um, announcement on Canada tariff. So I didn't hear that, but yeah, I think the market's kind of priced in a lot of the tariff stuff already. So if it's not a big reaction like we had before, I think now it's going to be pretty mild unless there's something big that's announced. But it seems like the tariff news is kind of baked in the cake, if you will. But for those of you that are poker players, you know what I mean, on tilt, right? Um, and I'll tell you one, I learned this a long time ago playing poker. When I first started playing poker, I'd only been playing for maybe 6 months or a year. And I know some people don't like, analyzing poker, but you're not playing against the house, right? It's not gambling against the house. You're playing a game against other players. You're playing at the other table. That's why a lot of casinos have gotten rid of their poker rooms because they don't make money on them. There's no profit in the poker rooms for them because they just take a little part of each pot. And then they got to pay the dealers, and the dealers make pretty good money. So they don't make a profit on them. And it was a big craze 10, 15 years ago. And so they all put poker rooms in because it was nuts. And they were probably making some money. But then once the fad wore off, um, But yeah, I just started in this little tiny casino just south, and you only have to be 18 to go in there. I just started playing poker, and uh, I've been playing a lot actually. I think that's why I love trading because they're the same things. You're looking for a pattern. Jacks, queens, kings, aces. You're looking for straights, flushes, all that stuff. You look at that's a pattern. You're looking for that pattern, and then you have to analyze if you get a pattern that you go, okay, here's a good pattern. What do I do now? Then you have to step back and you have to analyze it. What position am I in? Am I early, late? Because that affects my future. If I'm in late position, then everybody else is going to bet before it gets to me, which means I get to see all the action in front of me. So I know what's happening. I go last to make a decision. That means I have an advantage. I get to make a decision at the very end. That's why blackjack dealers go last, because that gives that advantage to the house. But you're not playing against the house, right? So you have to do the analysis. Then you have to decide how much do I want to risk? How much am I going to bet? Then you have the psychological part of who am I playing against? Are they good? Are they weak? Are they a strong player? Are they a weak player? What might they have? Based on the analysis of the action that's going on, how much they've bet, what they've done. There's physical tells people will give off. There's a huge psychological, I mean, poker is very psychological, just like trading is. But as far as processes go, it's the exact same thing go through poker as we do in trading. It's no different. Look for a pattern, analyze the situation, and decide how much to bet based on that analysis. So I am sticking to the class, Brenda. That's not a squirrel. But if you get on tilt in poker, which happened to me because I was sitting there and I get first three cards are three fives. I'm like, cool. Set of fives, high odds of winning that hand no matter what happens. So and in poker, you slow play it, right? You don't want anybody to know you have a strong hand. So you limp in, you play like you're weak. And then I get a four, and then the guy down at the end gets a pair of queens on the board at least, right? You have two cards are hidden, so they don't know what you have in the two cards. And he bets. I just call. I'm like, cool, I got a three. I don't care. He might have two pair, whatever. I get another five. So I have four fives. Four of a kind. Four of a kind. It's the third highest hand you can get. Three and a half, I guess I should say. And so I got four fives, and two of them are hidden. So people only see I have a pair of fives. Then the other guy at the end gets another queen. So he has three queens on the board. And I ended up betting just a small bet. And the guy next to me goes, he's got three queens, right? I'm like, yeah, I saw that. Everybody dumps except this guy. He raises me. And I come back over the top of him, raise him back. And he stops and he looks at me and he raises me again. And I go back over him and he's like, and that was maxed out. You could only do three raises because there was still somebody else in there. And they finally dumped out. And then we get the next two cards. He gets some other rag. I get a rag. And we end up betting. We just go back and forth until all my money's in. I think I had 40 or 60 bucks to start the pot. This was back in 1995. So 40 or 60 bucks was, it's equivalent to two, three, 400 today. And I don't have any chips left. He's only got a little bit left. And I flip over my fives and he flips over another queen. I'm like, what? And he got it on the river. He got it at the very last card. He didn't have it. I had him beat the whole time until the last card. And he got it down in his hole. So I had four fives. He had four queens. I'm devastated emotionally because I'm like, I knew this hand was mine. What are the odds of that? The odds are probably 1 in 2, 3 million. And I got up. Dealer's like, are you gone? No, I'll be back. I went to the cash machine, got more cash, came back, sat down in like 15, 20 minutes. I was out. And Tate Meir, who's a guy I went to high school with, he was sitting there too. And he got up and walked out behind me. And he goes, man, what were you thinking? Because I wanted to say something. When you take a beat like that, you don't get up. You don't come back to the table. You get the heck out of Dodge. You get bad. It's called a bad beat, right? If you get beat that bad. Because I was on tilt. My emotions were absolutely, and I started making the dumbest decisions on the planet because I was frustrated and angry that I just lost on a monster hand that I should have won a huge pot on. It was a $300 or $400 pot. And in poker, we call it on tilt. In trading, it's the same thing. You get upset, frustrated, angry because you made a bad decision, or maybe didn't make a bad decision. Something bad just happened. Maybe you got into a trade 3 days ago and it gapped because news came out. You weren't aware of it, and you didn't know it. You couldn't have been aware of it, and it gaps against you. And you went from being up a couple grand to down 5 grand. You're going to be cranky. And to come in and try to trade when you're in that mental space is foolish because you're going to make bad decisions most likely. Just like I did at the poker table. It's the same thing in trading. When you get on tilt, when you're, again, to go into the point to know thyself, recognize when you're in that spot emotionally that you're going to probably make bad decisions from here on out. And we all do it. We all get there. Just like every poker player gets there. Because when you get emotional, it's not a good place to be. It's not bad being emotional, but you have to learn to control it and manage it and know and recognize where you're at. And if you're not in a good place, if you're on tilt, don't trade. Get out of the market. Stay out of the market until you can clear your head out. The key is being patient. This is where I failed on that trade just a little while ago. Is it wasn't a very good setup, and I'd been patient. And I waited too long actually. I had other setups that I should have taken that would have been profitable, but I waited too long, and then I wasn't patient, and it wasn't a good enough setup to really justify it. So the hard part with trading too is over trading, especially if you're doing really short term, like day trading. If you get in and out frequently, is doing that too often because then it's hard to have perspective when you're constantly going back and forth. I mean, emotionally, you're in the trade, so it's like, your emotions are raw, and maybe you make money, and that's great. But then you do another trade, and it's like, and then you give a bunch back. So when you overtrade, that it's almost like, excuse me, um, I can't think of an analogy. You all know what I mean. It only takes one pitch. Right? If you're doing, let's just say, for example, you're day trading, you're doing 3 or 4 or 5 trades a day on average. If you have your risk reward set up and you're trading properly, I mean the way you should be, just one trade can make up for several little losses. You take a $100 loss here, $200 loss, $300 loss, it's $600. But then if you have one trade where you make $1,000 on it, okay, you're 1 for 4, but you're up $400. I'm just throwing numbers out there, using examples, but that's because that kind of stuff's happened to me where I've been down $400 and have one good trade go in my favor, and next thing I know, I'm up $700-800 for the day. Like, sweet. So, and again, just like going back to the baseball analogy, you step into the batter's box, you got at least 3 pitches coming, right? So you got at least 3 opportunities to hit the ball. It's not uncommon that, some batters will step into the box and they take the first pitch. They're not going to swing at it no matter what. They just let it go by. They don't care. It's like, I'm just going to make him pitch to me the first one. But it only takes one, right? You get one good pitch, swing at it right, boom, hit a dinger. That's all it took. You might have 5 or 6 pitches, but all you needed was that one. And same thing in trading. Exactly, Brenda. All that stuff, all is based on fear, and it's a matter of learning to recognize it and learning to manage your emotions. And the woulda, shoulda, coulda syndrome is it's a bad one, but it's always there because you're going to have that happen. You're like, and see, right now I'm looking at this over, I'm looking at gold. I'm like, I should have waited. And actually, it's got on the 5 minute chart, it's got this nice little trend line, which I played the breakout this morning about 7. It broke below it, just below, and then it turned and took off a rally to the upside. And then when it broke out of the resistance I had, I didn't get into that, even though it was a good looking breakout. And that was about a $1,000, $1,200 missed opportunity in 25 minutes. So I'm sitting here right now, I'm literally going through woulda, shoulda, coulda right now. Because I'm looking up at this thing and then it runs up, and of course it gets the high and peaks out. It starts to stall a little bit. It looked like a decent setup, but I should have kept being patient. About 20 minutes ago, it broke that trend line. That's the one I played bigger earlier today at 7, but 2.5 hours ago. And it turned on me. And if I was playing it right now, I'd be up 500 or 600 bucks. Actually, never mind. It just turned around. You guys are costing me money. I'm just kidding. Actually, it's a good thing to be right here right now because I would probably be making more stupid decisions. Actually, I'd be staying out right now because I know exactly where I'm at. I know I'm in a place where I shouldn't trade at all today. I should just say, you know what? It's a red day, but on the week, I'm actually up a little tiny bit. So it's a matter of how you frame it in your mind. Because yeah, I'm cranky. I mean, yesterday I was up 750, 800 bucks, something like that. I was up 300 the day before, so I was having a solid week. And this is I'm talking about futures trading, right? Because I've been trading futures for the last couple of years, just playing with them, and I finally kind of dialed it in to where not only having fun with it, but doing well. And so yeah, it's frustrating, but the goal is to have a green week because you're going to have days. The goal is to have a green month. The goal is to have obviously you like to have every day be green, but that's not likely. It's virtually impossible. And I've had some red days. I've had mostly green days and some big green days and one or two big green. Well, I've had several big red days, but the green days overtake the as long as the green is bigger than the red, right? So, but there's days it's just like, I just need to quit here. I just need to be done. I'll wait unless there's something compelling, which goes to the next question. Is there a compelling reason to enter the trade? These are questions that run through my head. I'm sitting there watching. I'm like, okay, that's a decent good setup, but is there a really compelling reason to get into this? Because I'd rather stay out of it and not take a $300 hit than have to try to make that back up. I'd rather wait for what looks like a high odds opportunity, which is the next question. What are the odds of it moving the way you expected? So is there a compelling reason to get in here? And if there is, what are the odds it's going to move to this point at least? Because now I've got it set up where as long as I get a 1 point move with one of these I have, the smaller trade that I take, if I get a 1 point move, I'm breaking even no matter what. It'll take out half of it at one, and then the trailing stop on it is 2 points below. So I make 100, then I give back 100. So I break even. So all I need is a 1 point move, which isn't much. It literally happened this morning in 23 seconds. The two little trades I did, 23 seconds, 27 seconds. Boom, they went like that and hit them. So I'm like, cool. That's the best place to be because now I have zero risk. And if it runs big, which gold can run 10, 20, 30 points. If it runs 10 points, I'm banking a grand. Cool. I have no risk. One of them ended up, the trailer came up a little. I think I made 100 on one, 180 on another. So, which again, not huge numbers, but you do that 3 or 4 times in a day, you're up 400 or 500 bucks a day. That's 500 bucks a day is 10 grand a month. And the beauty of this is that with technology today, you can connect multiple accounts to one account. So you have one master account, and then you have the um, copy accounts. So they copy that. So if you attach 5 accounts to that, and you're just trading the one, and you can average 500 bucks a day, that's 10 grand a month. But if you have 5 accounts to it or 10 accounts attached to it, you see you can do the numbers in your head, right? That's one of the beauties of the trade copier. And so yeah, you got a $200 day. Okay, so what? Doesn't sound like anything until you attach 10 accounts to that. That little $200 average day is now $2,000. It's pretty crazy. But there's got to be a compelling reason to enter the trade, and then you have to believe that there's a high odds of it doing what you expected, right? And there's the old pilot mantra. It's better to be sitting it out and missing a good trade than to be in a trade that's going horribly wrong. Now, realistically, you should have stops in place. And I do because futures are so crazy volatile and they're so insane that they can move really quick and you can get your head handed to you very fast. That's why I have very tight stops on a lot of these. And so if I do get knocked out, it'll be quick. The one I just did an hour ago was 350 bucks and it happened in about a minute, 20 seconds, something like that. I just danced around a little bit and ding, ding, ding. But then, it happens the other way just as fast too. So when it goes in your favor, it moves quick. But the key is to making sure that you have high odds, you have a compelling reason to get in, a good setup, and you have high odds of the trade working out in your favor and managing your risk well. And the biggest, hardest part of that is managing your headset, your not your headset, but your mind. You know what I mean? Right. So, any questions on the insanity of keeping your head clear? Let's see what it's doing. Yeah, see, that's irritating. See, I traded that. So this one right here in the middle is the 5 minute chart. So I traded this when it broke that just a little bit. Ended up taking a little loss. And then this 3368 level was good and it broke out of here. And I'm looking at it on the 1 minute chart and I'm like, it looks pretty good. It danced around and it ran up to 72 and then pulled back to 69. It was like, that's a perfect roll reversal. And I about pulled the trigger, and then I was like, I'm gonna be patient, wait for a better one, see if it maybe it'll dance around here for a little bit, and boom, it takes off. One, two, three, 4 candles later, it's at 77. That's 8 points. That would have been about $900 in 20 minutes. So yeah, I mean it's quick. You can see it's fast. You're talking about $100 per point per contract. So it's fast. And then of course this is the other one. I'm looking at the breakout of 77. It danced around here. We got the bearish candle, and I'm like, it might break out. And sure enough, it did. And so I missed that move. It was only 3 or 4 points, but that still would have been $200 to $400, $500 maybe, depending on where it stopped out. But again, that would have taken 5 to 7 minutes is all. So they're quick. My average trade's like 4 minutes long. Of course, that's considering the scaling out, right? So the one that was I had two this morning at like 27 seconds. So that's calculated in there too. But yeah, I mean the average it's just over 4 minutes. It was 5 minutes when I looked the other day. But so that's crazy. It's high volatility, high insanity. But now let's just spend we got about 20 minutes or so. Let's just look at charts. Any questions? I already know we got to look at this one. Yeah, it's so crazy. Mind-boggling to think that I guess we're not at all-time highs on IBM. Thought we would have been. Oh yeah, I don't have it streaming. Usually I have that running already, so I didn't even notice. Yeah, it's interesting that some of these, and it seems to be, it's definitely a stock picker's market. I remember a couple years ago saying, well, I think we're probably going to be a stock picker's market because you can see IBM's tearing it up, but then you go look at other companies like Wayfair and uh, you see, I mean, since 21, the last 4 years, they were actually, I mean, they were up at 350 in 21, and they dropped all the way to $28, 325. Well, that's 90, 95%, something like that, 98%. Massive dump, massive bear market. So, it's just basically kind of sort of been sideways when you look at the long term. I mean, lately it's been tearing it up. It's 25, it's almost doubled here in the last couple months. And this is where I get a little cranky because I was trading it. Looking at the trades back here, and there's a little double bottom, I think it was. Yeah, a little double bottom. And there's my trading plan that I didn't take advantage of. And right now, it's this is the woulda, shoulda, coulda, shoulda right there. It's like, why didn't I get into that thing? Why didn't I buy some leaps on this puppy? Go 6 months out, and even, I mean, you probably could have bought the 50s for $2 to $4. They'd be worth, they would have been worth $8 or $9 yesterday. So if you pay $2 for them, sell them for 9. Again, but then again, that's woulda, shoulda, coulda. Because if you bought them for $2 down here, they're probably at 4 right here. Would you have held on through this dip? And this is an earnings move, I believe. I mean, would you have really kept it that long? That's the woulda, shoulda game we play all the time. If I would have gotten in, I would have made a killing. But would you have held on after this gap up? I mean, the entry point's 30, it got up to 39. That's a 10-point move. You're probably at least at a double on that spot. Which, again, this is the reason that I like to scale. Because if you have an opportunity like this and you jump into something like that, what I love to do is take my original capital out. So let's just, for example, say you bought, 6 months or a year out on Wayfair when it's down at $30, and maybe you buy the 50s for $2 for 8, 9 months out. Maybe they're leaps. Put an order out there for half the position at $4. Get all your initial capital back, and now who cares what happens with the rest? I mean, obviously you want to make a profit, but if you don't do that and you get up here to 39 and then it drops back here, you're freaking out right here as this thing drops. Because you're getting back to, maybe a double or maybe more than a double here, and you've given back at least half your profits, if not 3/4 of it, when it drops right here this over the next week and a half. And by doing this, the odds are that you're gonna panic out probably on this gap down and like, I'm going to take my little bit of profit I have left. I left all that money on the table. That was stupid. Then, of course, the next day, 3 days later, it's even higher. And now you're kicking yourself because you got out. Whereas if you scale, if you would have done, say, you get out of half your position, okay, I'm okay here. I've got all my initial money back. I've still got a little bit of profit there. And if it continues to fall, then so be it. If not, great. And it would have allowed you to hold through this mentally and emotionally. You could hold through this. And a month and a half later, you're ecstatic because your little $50 calls that you paid $2 for, that you got your initial profit, your initial capital back here. You've got, if it's up here, if you wait for 60, that's $10. Now you got a 500% return on half the position. And you did that because you didn't have any risk on the table because you took out half the position at a double. So you have no money of your money on the table, if you know what I mean. You're not seeing the chart, Helen? I just noticed your comment. Because it's showing me that you're seeing the chart. But is there anything to see on IBM trip? No. Yeah, something's off then, Helen, on your end because it looks like. Is anybody else having a problem not seeing the charts? I'm assuming it's isolated to you, so because nobody else has said anything. Okay. Yeah, so I'm not sure what is going on your end. Is your computer on? It's like you always start with the dumbest questions of everything. It's like, wait a minute. I've heard stories of that. Like people call computer tech. This is a long time ago when, now we're pretty much everybody uses computers. But, when especially with older folks when computers were newer, 20, 25 years ago, people would I talked to this computer tech and he goes, yeah, there's people called it, my computer's not working. So they like, ask him questions like, is it turned on? Yeah, it's on. Of course it is, but the screen's blank. I don't know what's going on. Hey, well, push that button right there. They push the button, the power button, and all of a sudden it turns on. It's like, whew. So, yeah, I know I hate asking dumb questions like that, but sometimes you got to ask them just to eliminate the basic stuff. Spider's going to look just like the SPX, which will be that's not yet today, but it should show. Yeah, down a little bit. I mean, we're just dancing around all-time highs. I would expect to pull back. I mean, after a rally like this, it's probably going to pull back some. I don't know where thought I had a line on here, but it's probably SPX. Oh, good point, Andrew. I should have thought of that myself. I didn't think about it though. I'm not that used to playing with Zoom on that end. CRCL? Well, that's a new company. There's nothing to analyze on that from a chart perspective. This is when it's this new, there's no way to really there's not enough history to do anything with, technically speaking. So um circle in and I don't even know what they do. I mean, you could look at it from a fundamental perspective and take a guess at it, but that's a WAG trade right there. You guys know what a WAG trade is? A wild at guess. That's all it is. There's nothing to do with this from a technical perspective, and I don't know anything about the company. So yeah, that's the first I've ever seen or heard of them, which obviously they're only out for 3 weeks or so. QSS is another one. It's going to look just like the NASDAQ, just rally. So there's not much further analysis to do with this. I mean, obviously it's not. Some of these I'll take off because they're not relevant anymore. In fact, I don't even know if that trend line is relevant anymore. Yeah, not really. I mean, it's been busted and back above there, so that's pretty much gone. I mean, when you look at that from a perspective, whoops. I mean, we dropped off to what 420, 415, and now we're back at 555. The V bottom is just crazy. V bottoms are very rare, right? V bottoms don't happen in the market very often, except they might be getting more and more common. We have the 2020 COVID, which makes sense since a huge percentage of people now trade online. And there's a bigger percentage of people that manage their own money. They don't give it to fund managers. So when we get, big moves like this, we could very easily have a V top too, because people are again making their own decisions. I've heard recently that 80% of trading is algorithmic, which might be true. Sounds high to me, but it could be true. I mean, if it's all the hedge funds, which a lot of them do, then that makes sense. And they're designed to, okay, if it drops 15%, buy it. If that's what they do, the algorithms tell them to buy because of the dip. So I can see the volatility and the swings like that happening. And when you look at the bottoming spot here, I mean, here's one, it pulls down a little bit, catapults to the top or up. It's definitely a little different than it used to be 20 years ago. So CRWV, is that CoreWeave? Whoops, I think I got that wrong. CRWV. Yeah, that's what I thought, CoreWeave. This is another one that's fairly new. Come on, come on. What's it doing today? Actually, I just saw this yesterday. A little late to catch the move, obviously, but there's a little tiny head and shoulders. Formation looks nice. It's just smaller than I don't like it when it's small like that. The left shoulder, right shoulder are literally like 3 or 4 days worth. That's not a typical head and shoulders takes a few weeks, if not a few months to form. But that doesn't mean if the pattern's there, it doesn't mean that we're getting weak because that's what the whole pattern is, right? Making higher highs, higher highs, higher highs, and then all of a sudden the bulls can't get it up to here. They roll it, the bears roll it over, creating that right shoulder. So if they can't make a new high, that means the bears are starting to win at least. At least the bulls are losing steam, one of the two. So again, it's a little smaller than I like, but there's been many a times where I've seen things like this and they take off and move, just like this one is. And sometimes you get a beautiful move out of it, even though it's not ideal. It's not what I like. It's not what I want to see, but it's still there. So I might just not trade it with as much risk. I might just take a smaller position on it. And I looked at Netflix the other day. It's like, whew, where's this thing slowing down? Well, yeah, you can see there's a nice looking head and shoulders right there. The right shoulder took, I don't know, a month or two to form, maybe three. The head took 3 or 4 months to form, and then a nice looking right shoulder. Obviously didn't play out, right? Because not every pattern does. So I'm going to take that off. There we go. Just start fresh. Just look at it. Interesting. Those are all pretty equidistant, huh? So I would be expecting some pretty significant pullback at some point here soon. Where is trying to see when earnings is 12:35. It's down 15. It's down a little bit more than that. 7:17 after the market. So there's where earnings comes out the next day. I always do this. I throw a vertical line on there. So if I have it streaming like I do now, if the candle is on that line and I'm in a trade, now I know that I better get out today. I just saw your other note, Jennifer. I didn't see that until I saw the things, but yeah, that's funny. She said her dad was a home inspector and the engineers were the most conceited. One problem when a dishwasher had been installed and didn't work was, did you turn it on? It hadn't been turned on. That's why you ask the basic ones first. You ask the dumb questions first to get them out of the way. So, um, yeah, I don't see. I mean, there's no significant patterns here, so it would just be to me. There's nothing compelling here to get me into any kind of trade. At least that's me. Because like I say, I don't see any. There's no specific pattern. Nothing that says it's time to enter here, other than the fact that it's breaking support. I mean, I guess I'm gonna go look at indicators and see if there's anything there. But well, there's a little bit of, but that's a longer term thing. When you look at MACD, you see it's starting to diverge. It's starting to move south. Even though got higher highs in the stock, you got lower highs on MACD. So that divergence is bearish, but it's usually not for a short term. That's a longer term thing, generally speaking. But it could be an indication that we're going to get bearish here for a little bit. This may be, I mean, because this thing's volatile enough, might not be a bad Grand Slam trade type of thing. If you can pick up enough contracts here and it moves big, if it drops off here and you can get out all your initial capital, leave one or two contracts there and hold it through earnings. If you're up for taking the risk, right? You buy some options for $5. Say you buy 10 contracts at $5 and it goes to $8, or just say it goes to $7. You sell eight of them out, right? You put 5,000 in the trade, you sell eight of them for seven, that's 5,600. So you got your 5 grand back plus a 10, 12% profit, a $600 profit on 5 grand. Then you have two contracts left there and you hold it over earnings, because if it goes against you, I mean, if you bought puts here and let's say they come out and say earnings are terrible, it drops to $1,000, you have a grand slam, right? It's only on two contracts. You'll kick yourself. You'll go back to that woulda, shoulda, coulda syndrome. Like, man, I should have held on all 10. Yeah, but did you really want to hold all that risk? You really want to take the whole 5 grand and risk it? Because if it goes against you, you could lose the whole 5 grand. But in this case, you not only have your 5 grand back, but you also have a $600 profit. So if you had puts in this case, and good news comes out and it gaps to $1,500 and your puts are worthless, okay, I still have a small profit on it. I'll take the small profit and be happy. But let's say bad news does come out and they say, oh, things are terrible and it's going to get worse and it drops dramatically. Now your puts could be worth a killing. Called the Grand Slam trade, where you get into a multi-contract position and before earnings. And if it moves in your direction, you can get enough of it out and you get your initial capital back, preferably a profit too, and then leave a little piece there if you're willing to take that risk. I mean, obviously you would realistically have two contracts left with $7, but you're still risking $1,400, right? If you had the contracts, if you would have sold them all at $7, you'd have that additional $1,400 in your pocket. But if you're willing to take a risk of it and leave that $1,400 there, or maybe you don't want to take 14, you just want to do 7, so just leave one there. Whatever, you know what I mean? Just do what makes sense to you. I've done that a handful of times, and it worked out great on Home Depot like 3 or 4 years ago. I only left one because they were $14. I'm like, I don't want to waste $14 on. I mean, it's $1,400 in the big scheme of things. It's not a ton, but $1,400 is not chump change either. I mean, a couple $100, you can go out to dinner for a couple $100. I could go to a lot of dinners for 1,400. But it ended up gapping down the next day and it turned into 2,400. So I was like, cool. An extra $1,000 on one contract. I think I only paid $6 for them or something. So it worked out well. Sometimes it does, sometimes it doesn't. I've also done it where I've left them there and they gapped against me and did the opposite, and I lost the whole thing. So, all right, we'll take these last three and then we got to call it a day. Your cats are somewhere else. I don't know. I don't care. I'm happy the fact they're leaving me alone. Last night when I'm trying to record, both of them coming up, getting in my face, and then they just want to sit right here in front of the keyboard. It's like I'm trying to work on the keyboard. I can't have it with a cat sitting there. So that's where a dog would be handy, Steve, because the dog just stays on the floor, just sits there and chills out. They don't get up in your face and rub all over you. So it's just annoying. Honestly, I never thought I'd be a crazy cat lady, but here I am. Never thought I'd have a cat without having a dog, but it is what it is. Yeah, on this one spot, that's I can't call that a Head and Shoulders. Um, is it maybe indicating a little bit of weakness? Possibly, but I'm not seeing nothing super compelling there. I mean, there's a little bit of support there about 700, round number, 702, 700. So if it breaks south of 700, the odds are it's coming down to about 750, which obviously it can do it quick. So this is something maybe if you're really, oh, this is Spotify. Duh. I didn't realize what it was, but not that it matters, but drop the 3-1 there about 650. I probably wouldn't take a ton of risk on it, considering that there's nothing super compelling. But if you really think that is going to move from 700 to 650, which I can see it doing that easily, especially when you look at the volume. I mean, the volume got lighter and lighter as it rallied. So, you have a nice little push of volume here, creating a little bit of momentum. Well, that momentum continued here, but I guess it was decent volume. But this whole section of volume was not that heavy, and it was kind of mostly sideways. So we got a decent little pop here. But then the sell off was pretty heavy too. So the momentum, based on that volume right there, the momentum from this move is, at least in the short term, looks like it's on the bear side. So I can see it breaking here and pretty easily getting down to 650. So, but again, I probably wouldn't take a lot of risk on this one. I'd probably just do a small one, just because it's not a super compelling pattern. It's not a super compelling reason to move, but it very well easily could. So, and that's going back to, I mean, how many times have you missed a trade because, oh, it's not that compelling, it's not that great, and like, so you stay out. Hence the reason that I'll take just a little position. Because then when you don't miss it and it moves, you're like, good, I'm glad I got in. I did one contract. And then the woulda, shoulda, coulda will kick in. Is I should have done all 10. Well, yeah, you should have. But then again, you got to go off based on what you're looking at right now. Right. Yeah, you might be right, Jennifer. Just watch out for that word feel. Use it, but use it cautiously. Analyze things. It's fine to feel things, but make sure that your analysis. I was just listening to. I've got this book. I've got it on paper and I've got an audiobook. I started re-listening to it yesterday. It's Thinking Fast and Slow, and it's about system one and system two, right? Your brain and how it works. You've got your unconscious, subconscious brain that makes decisions like this, right? The things that breathe. And when you're driving a car, you've done it so much that it's just second nature. Then you have system two, which is the deeper, longer thought processes, right? Where you go through this stuff and you analyze it, you do this, do that, do that. And they work in conjunction with each other. It's really interesting to listen to, but um, there was something I need to go back and revisit it because I didn't catch all of it. It was talking about the rational brain versus the emotional brain, right? You got the emotional side of things and the feeling side of things, and then you got the rational side. And being able to rationalize through things is more important than intelligence is, right? You got IQ and the intelligent quotient, then you got EQ, the emotional quotient, and then you've got um, the rational, which when I heard that the other day, I'm like, this is a little bit different side of things, right? You got the IQ and the EQ are important, but then you got to be able to rationalize through it, which is kind of seems like a mix between the two. So have your feelings, manage them well, but also use the rational analysis side and combine the two. And then when you put them together and use that to go, okay, here's what I think, here's what the analysis says, here's what I think. Based on that, here's how much risk I'm willing to take. Here's what are the odds I'm going to do, have something's going to happen. All time highs, no patterns. There's nothing to do with NVIDIA here as far as I'm concerned. If you think it's going to keep going higher, and it might, who knows what's going to happen here. Yeah, there's nothing on NVIDIA to really analyze there. That's the hard part about getting all time highs like that. I mean, there's no resistance, there's nothing there except for the ranges. Yeah, but for our short term trading purposes, that doesn't mean anything. I don't care what the valuation of the company is. What I care about is it going to move. Is it going to move in the time frame that I want it to move, and move the way I want it to? Well, that's the hard part of that. Well, see, here's Amazon, okay, and we've got a little, I guess there's a little bit of a flag pattern type kind of. It's not really, it's not a traditional flag, that's for sure. The flagpole's tiny. This is like a little kitty flag. There's only 2 days up, and then it's gone sideways, and it's breaking out of these highs. So it could continue rallying up here to the previous high. There's a little bit of minor resistance right in there, about 228. This is not something I would. This is not compelling enough for me to jump into it. Am I going to take some risk because it's got a potential 7 or 8 or 9 point move? Not on a $225 stock. That's going to your comment, Jennifer. One of the problems trading all time highs is not knowing when it turns down. Exactly. Um, so wait for some kind of pattern. That's what I'm always doing. It's like, okay, it's an all-time high. What am I going to do with it? Unless there's something that shows up, and then you can use candlesticks, right? Because candlesticks are shorter term in nature. So if there's a candlestick pattern that shows up, an evening star, or a rising through methods. Rising through methods is a continuation pattern. That tells us that the trend is likely to continue. There's a pattern, there's an opportunity to say, okay, here's a compelling reason to get in, and it might continue the rally. You get an evening star, a bearish engulfing pattern, a hangman, something like that says, okay, the end may be near here, or maybe at the end. So candlesticks are great for short-term analysis. The bigger Western patterns are good for longer term, and I'm looking for breakouts usually. So it's a combination, right? Using those, finding like here you've got this little consolidation after a pretty solid move to the upside, a good breakout of this 214, and then a sideways move. Well, if it breaks out of that, it pretty high odds I think that it's going to rally up to here. But obviously that remains to be seen, and that's one reason you got to manage everything. So make sense? Clear as mud. All right. Any real quick questions before we call it a day? Any frustrating anger comments that I should have been patient and waited for this 7150 where I'd be up? I wouldn't have lost. I'd be in the green still. Is that about right? Where's it at? It's up. No, it's SPX is down 16. This is about 15 minutes delayed, right? So I don't know where. Oh, the spiders is down a buck 50. So it's rallied up a little bit from here. It's down. So this is showing down 212. It's down a buck 40 right now. So let's make a little rally intraday right now. Where it goes to, who knows? Yeah, near all-time highs. Well, and there's the what do we have forming right there now, Jennifer? Depending on what today finishes like. If today finishes, especially if it finishes down, it's not beautiful. It's not textbook, but we have an evening star type of pattern going on right now. Depending on what today does. If it rallies back up and closes somewhere inside of the body of this candle, then yeah, it's nothing. But if this thing turns over and sells off and turns out to be a candle like this, anything that's either a doji would be, it's not really an evening star technically, but we have an evening star like pattern, right? Where you have one day here and then it gaps up and you got a little spinning top. I mean, they're all kind of spinning tops, but technically it should be a big candle and then a spinning top or a doji, and then it gaps down and sells off. That's the traditional pattern. But do we have a gap down today and a sell off a little bit? Yeah. So could you treat it similar to an evening star? Of course. Um, because the concept is there, right? And I look at patterns now from a conceptual standpoint. It's like, okay, who's winning, the Bulls or Bears? And today the Bears are winning, not by much, but they're ahead. So, so I would treat this with caution. This is where I'd be pulling stops up on, like, if I was trading the spiders itself and you got it on this breakout, maybe, in rallying. If you didn't get out here, but at this point, there's no real pattern here. There's nothing compelling there that says that it's time to turn around. We've got a minor little issue here saying that, okay, we might be slowing down. So myself, I'd be tightening stops up to somewhere in this area where protect the profits if you have it. So Norman, yeah, Trade Navigator, Omega Charts, the same thing, made by the same company. One's just branded for us. I don't even know which one I have up here. I've used both of them. And part of the reason for that, which goes right to your question, my suggestion, the best way to learn them, I actually have a course that I created about using Omega Charts and Trade Navigator. I did one for the I was asked to do one for the company itself that created it, and Omega Charts is ours, obviously. So, but yeah, it's essentially the same program. Omega Charts is actually better because you get a higher level of, because they have different levels. Like you get real basic for one price, then you get the intermediate, then you got the high end one that has, if you're a crazy programmer and you want to do all that stuff. Um, but Omega Charts is one of the higher versions for a lower price. So get Omega Charts. But then there's that training that I created as well that's in Wealth Builders that you can get, where I go through and show you everything, all the different features, how to set it up, how to create it, how to use it. It's 6 or 7 hours worth of material about how to use Omega Charts and maximize it so you get the most value out of your money. So that'd be my suggestion. Just get Omega Charts and get that trading program. So, and that should be on the back end. If you have problems finding it, just call support. They'll take good care of you. So, all righty. We're going to call it a day. We're well over now. So thank you all for coming and hanging out. You're welcome, Jennifer. Appreciate your questions. It always opens up interesting conversations. And I'm sure that some other people are appreciative of your questions because it puts little nuggets out there that are important for all of us to know and keep in mind. So All right, I'm gonna go look at gold again and get frustrated some more. Y'all have a great weekend, and we'll see you. We'll see you very soon. God bless. Bye bye.